All right, good morning, everybody. Hope you guys are all having yourselves a fantastic start to the AM. Happy Friday, right? Hope you guys are having yourselves, good Friday, right? Ready for a weekend, and yeah, kind of ready to go here this AM. We are hopefully getting out of some potentially choppy PA. Yesterday, right? If we look at the price action, quite the doji. We're opening up slightly higher here this AM and then fading off. But definitely want to be a little bit cautious here, maybe a little bit skeptical still, right, of some of the price action that we've seen. As if we look at this on a weekly time frame, right, or we zoom out even further, we're still very much consolidating inside a high volume sell-off. So the pressure, right, for us to force a decision or for us to say that we've got trending price action, I think is maybe a little bit premature, and we need to fight basically that desire here. What we've essentially seen so far this week has been, relatively choppy, relatively indecisive, right? We've got 3 out of our 4 days here so far, kind of in the more doji type style. So, not exactly a strong indication that we've got control in either direction. So my objective here today is to basically not ruin what has been a small week, right? Nothing crazy, 2 trades, 1 small win, 1 small loss. And certainly not looking to force something or ruin my week or blow an account or do anything stupid like that here today, right? I've not seen a ton of evidence that it's going to pay for us to be aggressive here still. And so it continues to remain basically that same story, right? Markets are going to behave the same way or the way that they always have until proven otherwise. And we don't really have that proven otherwise here still available to us. So caution, right, is going to be the order of the day. We had a ton of names report earnings there yesterday, right? Specifically Google and Microsoft. So again, we've got some follow the leader type price action we could be aware of, but we want to make sure that whatever narrative we fall in love with here this morning, it's consistent, right? It's clean, and it gives us confidence, right, that we're not going to get faked out. If we've seen sort of choppy conditions here all week, if we've seen a lot of dojis, if we've seen a lot of stuff like that, it's impossible for me to not be terrified, essentially, that I'm going to get faked out to the downside or faked out to the upside, and then the trade's going to go in my favor. So what I want to make sure here, right, is that I have those consistent stories that I can overcome essentially a lot of those, we'll call them limiting beliefs here this morning. And then if I can, we'll have a great day. We'll find ourselves some clean price action. And hopefully, right, we'll finish off the week with a really, really nice win. Otherwise, well, I'm certainly not going to force anything. I'm not going to rush it. I'm not going to put anything stupid out on the table, and I'm going to force myself, right, to control the variables I can so I can continue stacking up wins. Not every week has to be a 10R week, right? And if I can keep this as a net 3-point win on the week, I'm ultimately going to be okay with that here too. So with that being said, right, with that preamble out of the way, let's kind of start mapping things out here, figure out what we want to do, and then kind of get after it. So good morning, Suresh. Good morning, James. Good morning, John, Craig, Ruben, Steven, Gary, Brian, and Michelle. Hope you guys are all having yourselves fantastic AMs here so far today. And yeah, ready to have a, call it, fingers crossed, very profitable trading session. Hey, Abraham, how you doing? So first things first, let's start mapping out things on the ES. What's the count here? What's the... Yeah, let's go from there. Hey, Tanja, how you doing? And what do we want to be, I guess, concerned about? Oh, my pleasure, Abraham. I want to have a good day. It's fun to trade with you guys. So if we had a week 3 for 3 right on yesterday, what are we saying we kind of have here today? Like we're getting a similar version, but the other side of the coin, right? You guys kind of see what I mean by that? Hey, SG, how you doing? Hey, Tranquility. So what's the count, guys? What's the count? So it's actually a gap up, right? Because yesterday's close. So 2 out of 3 with volume / a gap up. It's going to be the same situation regardless. But we're going to call this a weak 3 out of 3, like Ruben and Steven are saying. Open here, right, is greater than the previous day's close. And then we've basically been fading since the open. Hey, Bugs, how you doing? Right, so basically what we have here, high volume indecision. So no real indication of trending price action. And then if we zoom out right to the weekly time frame, we're very much confined still within Friday's range. We talked about that already a little bit, but that kind of tells us the same narrative like we've seen there yesterday, right? High volume indecision or high volume consolidation after Friday's or last week's price action certainly gives us reasons to think that, you know, this is still, call it a pessimistic market, right? Or one that isn't fully giving us a directional clue here yet. And so that's going to be the emphasis, right? Establish trending price action or look for basically continuation of whatever the longer term narrative is. Now, with a 3 for 3 here to the upside, I'm a little bit less flexible, we'll call it, right? With being able to play trades here lower. But if I can get biggest volume of the week here across the board, you know, maybe get that trend day Friday going, there's possibility. But it's easier for me to get in like a bull case scenario here trade than it is a bear case, just because that volume standard is increasing. It is outlier. But I'm, call it annoyed, right, with the candle shape. I think that leaves us a lot to be desired. So I'm going to be cautious. I'm going to be a little bit patient here. And make sure that if I do get a breakout, right, it's a clear indication of not really being in that consolidation, right? We couldn't get that separation there yesterday on the shorter term time frame until way later on in the morning. So we'd like to see, yeah, clear indication of that separation. Make sure we aren't getting chopped about, and then hopefully from there, right, we can have ourselves a little joy. So short term, okay, no breakout here. Right, because it's a 3 for 3. So we're looking for high vol breakout, and then we're targeting, right, last week's high. So like 5,200. So I don't know if we're going to move 80 points here necessarily intraday, but that would be give or take the range here that we're going for. What did we do yesterday with the week 3 for 3 that we can maybe learn from a little bit here today? So yesterday, right, we didn't really have a bull case. Today, right, okay, technically maybe we shouldn't have a bear case, but if we've seen price action behave in one way, how could we plan out for a worst case scenario? Say everything starts breaking down, we get a ton of bearish price action. What would that need to look like? Yeah, overwhelming and general market cooperation, right? So yesterday we wanted to see market to like basically follow the leader with Meta, and it kind of did do that, even though it acted maybe a bit as a laggard. So we're gonna want to see what the leading names are here today. I mean, Microsoft and Google essentially, and see how they behave. If they all start to break down and we get that overwhelming volume standard and we get that kind of high conviction, we'll call it setup trigger, then from like a weekly standpoint, it would not be illogical to think that we would get rejections in the upper third, right, of last week's range. So, okay, I think there's a pretty reasonable argument here that we can make that bears could step in, but it would need to be, yeah, exceptionally overwhelming and a ton of market cooperation. And we weren't willing to have that thesis there yesterday because we haven't really seen evidence of that occurring. So today, right, we've got evidence of the market kind of going with the leading names and then volume kind of backing that narrative. So if we're willing to say that that basically played out there yesterday, we could be looking for a similar version of that story, albeit in the opposite direction. And it's the weak 3 out of 3, right, that essentially allows us to downgrade the quality of this trending price action and have a bit more flexibility, right, to the downside or the upside. If that candle shape yesterday there was like so incredibly powerful, a full body bullish or something along those lines, then I think I wouldn't be able to have that sort of scenario because then I'd be looking for dip buys more than breakouts. But because yesterday's candle is giving me indecision, and we've seen that narrative here generally across the board, that gives me flexibility to look for breakdowns because I have less evidence that bulls have defended those lows or that bears have defended those highs. So breakdowns or breakouts into the middle of that range seem to be the sort of flavor of the week. Does that make sense? And then we're talking room down towards like 52.20-ish. Wordiest I've described this in a long time. So, hey, Michael, how you doing? Make sense, guys? Beautiful. All right. So QQQ, 3 for 3 here to the upside, right? Slightly more bullish bias, increasing volume, full body bullish candle. And we call it maybe normal body bullish, but strong, right? So we'd be looking here for dip buy scenarios or breakout scenarios, right? If you're trading NQ, tough to be bearish here unless you really invalidate everything. So easier to be a bear on ES than it is to be on NQ or QQQ. So 3 for 3 here, right? Probably want to see a breakout towards 430, so $1 worth of space. And then above that, you've got 433, yada, yada, yada. But 3 for 3 to the upside, hard to be bearish here, right? Telling you that you've got bulls in control, biggest volume of the week. Hard to be a bear here. Right, so the reason why I'm willing to be bearish versus, or on ES versus QQQ, right? ES candle shape really weak on increasing volume, so it tells me that there's a fight. QQQ, right? Strong candle, strong volume, strong gap up, much more consistent narrative. So, yeah, I mean, that's sort of the difference. I can't downgrade this setup essentially. That make sense? Yeah, 428 still. Uh, 430-ish, 435-ish. Cool. All right, Apple back above 170. I mean, if this thing can start to finally run that swing position, I'll be able to breathe again. That 170 average price is acting like a magnet, but not one that wants to see separation from. Look, it's a technical 3 out of 3, right? Increasing volume, second most bullish candle, right? Bottom wick is significantly greater than the top wick, so I'm willing to call that second most bullish versus a doji. A little bit of a gap up, not a crazy gap up. I think the resistance here, though, is 171. If you get above 171, then you start to get a little bit of space higher. And then I probably would still like to see an increasing volume standard here show up on this prior to being very aggressive. I don't think Apple's going to be the leading name here. if a Microsoft wants to rip higher, if a Google wants to rip higher, and we see volume stepping on Apple, then it could act as like an accelerator and get like the Tesla recall, because it's just pedal to the metal, right? And it's absolutely flooring higher. But I'm not sure if I have that volume base here yet for me to be aggressively forceful. And I'm going to want to see that 171 reaction prior to doing anything here. That's outside of the norm. Hey, Chama, how you doing? And then because it doesn't have outlier volume really supporting this narrative, I'm less skeptical to look for dip buys inside the spot. I kind of would just want to see a 171 breakout. Okay. Tesla. Full body bullish candle, bullish engulfing candle. Not bullish engulfing on volume. We probably were never going to get that here post earnings, so that's fine. But higher high, higher low, baby a little gap down here. So this looks pretty strong, right? I would say that this is looking more like bullish trending price action than bearish trending price action. But you wouldn't be looking for a dip buy here, right? Again, we're setting up as a breakout scenario, and you want to see a breakout over, again, 171. So Apple and Tesla are rhyming. It's a weird coincidence. But yeah, if we can get a big volume breakout here, fantastic. Preferably on bigger than yesterday. That would be great. Yeah, I think that's it. So Tesla, right? It's decreasing, but outlier volume. Apple was increasing, but not outlier. So they're kind of showing us versions of relative strength, but we'd like to see that story just become a little bit more consistent, and then there can be some joy. And then again, right, 171 plus on increasing vol. Okay. Wowzers. Okay. Huge gap up here. 15 bucks almost, 14 bucks. So full body or second most bullish, increasing outlier volume, mega gap up. This is a bullish scenario here. Challenging for me to think that I've got a bear case. Not interested in playing rejections. So yeah, this is a 3 for 3 to the upside. Look for dip buys or breakouts. Why am I maybe also not willing to look for BB reversals here this on these setups here? What have we seen happen to these big gap ups or big gap downs so far on these earnings names? Yeah, exactly, Michael. Yeah, we've seen like Meta go to that here. I took it off my watch list somehow. Right, if you've seen Meta recovers really big. Tesla, right, went higher significantly after its gap up. Google, right, huge gap up. Holy Jesus. So we've got less evidence, right, that some of these have reversed. And if we are going to get a reversal, well, the easier setup is already in the index, right? Where if everything starts to crack, that becomes the A+ trigger for us. And we've got a nice zone of focus that we can kind of zoom in on. So sweet. All right. On to the next one. Amazon. Huge gap up, not going into earnings, right? Which is a little, well, it isn't the earnings event here yet. So acting as a sympathy gap up here this AM. This would probably be the slightly easier one for us to go BB reversal if we're going to go quite that path. But still giving me outlier volume, telling me a very consistent story across the board. I'm not going to be playing hero ball here and trying to be the first one fading this. So breakout or bust still, right? Looking for continuation narratives, seeing if we can get a resolution to that inside week, and then we can kind of go from there. And I mean a resolution on the inside week here on an index level, not on a specific name level. Make sense? Cool. And yeah, we're still going to look for like probably 180, 150-ish. Not really in a rush here, right? Is the moral of the story. All right, AMD decreasing volume, lower low, lower high, gap up. This would be setting up potentially as your reversal setup, right? Or your better rejection versus all the other names. Because it's this gap up is telling us a slightly different story, and it's gapping up into an area where we've seen rejections occur here before. Not to say that that's the scenario I would be looking for here at this spot. But if we're going to be looking for rejections, right, this is a slightly easier story to fall in love with. It's a 2 out of 3 without volume. So, yeah, you could look for a biggest vol reversal, right, or biggest vol breakout over point of contact on the trend line. So, either way, right, we need to see biggest volume of the week here show up on either a breakout or a breakdown. Same shit here on a NVIDIA. I don't know why I cursed. So we're looking for a high vol rejection right inside Friday's range. We've seen that occur here before. Looking for basically a retest of Wednesday's price action. Or, right, you're looking to invalidate that by breaking out over this ascending wedge, maybe that 850 zone, and then pushing right up towards where that trend line resistance. So call it 850 breakout or Friday rejection. If we're saying we're looking for a last Friday rejection and we're saying we're having kind of an inside week on the index level, what does this tell us about like NVIDIA, right? Is it telling us a similar story to what we see on ES, or is it telling us something a little bit different? So if we're still stuck inside Friday's range and we've had an inside week on the index, probably a very consistent story, right? Or it's kind of like the cousin of a story that we fell in love with. So we want to see big vol breakout, right? We want to see consistency show up across the board here and create that level of enthusiasm for us. Cool. Meta 2 out of 3 here. You'd want to keep going for a gap fill setup, 445 breakout and go. 2 out of 3 to the upside. So you can look for theoretically dip buys or breakouts into yesterday's range. So we'll call it a 2 out of 3 with volume. Can't spell here now. So high vol breakout over 445 or dip buy inside yesterday's range. Can't downgrade this. Strong looking candle, strong looking volume profile. So bull case or bust here. Netflix looks like shit. 1 for 3. Looks like it's now consolidating inside this range. I'm cursing a lot here this morning, guys. Don't know why. So there's our range. Need to get a breakout over or under. Maybe more like that. Okay, Google. Mega gap up here. Biggest one we've seen, right? $20. Give or take. That's a huge gap up. Mega earnings. Yeah, almost 10%, 15% gap up. So Okay, now you're into all-time high territory, right? Mega Ripper. This thing is flying. Probably too big of a move at this point for me to want to chase, right? Biggest fear here would be that this thing has done the move overnight. Not a name that I trade here very often regardless. So I'm going to say one to watch versus one to trade. But it is giving me, call it market leader vibe. So if this thing tanks and fills its gap down to towards 160, then I think we're going to have a really aggressive trade to the downside that we could take advantage of. I'm trying to find another filler word for some reason. But I don't know if we need to do anything more aggressive than that, right? We've got what looks to be maybe more breakout scenarios on the individual names and maybe more indecisive scenarios on the index level. So I'd like to see which one basically acts as the magnet here, right? Do the breakout scenarios trigger upside P&L or upside price action that we could then take advantage of? Or do we see those breakouts fail and then get supported by the index flushing lower? So I'm really interested to see basically which side wins here this morning. And if we get essentially a continually inconsistent story, then I know it's just going to be a chop city day. So that's really the plan here this morning, guys. We got 4 minutes till market open. So if you guys have any questions or anything that you're looking at, let's pop them in the chat. Let's go over that here now. But besides that, let's have ourselves a big trading day. All right, so today I can have a slightly flexible bias. A lot of our watch list looks to be giving us breakout setups with the index giving us indecision. So I want to see which side wins. Breakdowns will be best if we see failed breakouts across tech, and breakouts will be best if tech pulls the indexes higher. Volume will be the key here again today. So realistic profit target, Michelle, is going to be based on what the opening range is, right? So if the opening range is 5, 10, 15 min volatility is like less than 10 points, then 2R away, right, or 20 points away would be a pretty reasonable target for me. If the opening range is like 15 points, then I'm probably going to say that that's too far away. So it's mostly dependent on what the volatility is. These red lines on my indicator, right, are 2R, whatever the range is. And so those tend to be sort of my general profit targets, or what I consider to be a realistic profit target. Hey, Rusty, how you doing? 100%, James. That's our number one priority here this AM. Only thing that matters. How you doing, Brian? So guys, right? Control the variables we can control. Don't force anything. Don't do anything stupid. We've got a relatively low volatility environment compared to what we've had here so far this week, right? Or what we had there last week, right? We've seen that fade quite significantly. But we want to be convinced by the volume, not be lured in by the indecision. Right? That's priority numero uno. I'll try to keep it relatively clutter-free. But yeah, if it's ever too cluttered, guys, let me know. Consumer sentiment comes out here today. That's not a big deal. I'm not too concerned by that. So let's see how it goes, guys. I'm going to quickly go make myself a cup of coffee here. I'll be back in a second. One moment. So in this context, right, Michelle, our target here would be about 8 points away, right? So, 16 points away. So pretty reasonable targets. And if we enter in anywhere inside this green box, right, in theory, then you get 4-to-1 risk reward, right, towards sort of those upper and lower limits. Opening volume, okay. But I don't know if it's like amazing. We've got a little bit of a sell-off here so far on Microsoft. So makes the bear case potentially easier. We'll see if QQQ sustains. So yeah, let's see how it goes, guys. We have a chance for this candle to be increasing on volume, which would be pretty rare. The 5-min volume looks a lot better as well. 5-min's actually kind of interesting. 3-min, maybe less so. Microsoft. Probably the over-under we want to set for Microsoft is 410. When it's above 410, we're probably leaning a bit more bullish. If it's under 410, probably leaning a bit more bearish. So obviously no volume confirmation here yet, team. But there's a breakout. If we can get now good separation on increasing volume above, could be in play. If it takes now 2 or 3 candles for this to come together, fine as well. But we want to get confirmation of separation, confirmation of that separation on volume, which we haven't gotten here yet. And then obviously we need our confirmation candle to still be giving us a strong shape here. So a lot of work to do. We have a setup trigger, fine. But we need a confirmation trigger and a volume confirmation. Call it candle confirmation and volume confirmation. Tesla 170, Microsoft fallen 407 and rapidly. So I would be careful about some of these breakouts. These maybe for my money will turn into false breakouts. So guys, a couple themes, right, that we focused on here so far this week that I think are worth repeating while we're still waiting for our setup trigger. So a couple core concepts, right, that we always want to focus on. Candle shape, volume profile. We want those to be telling us similar stories and versions of strength as we see separation away from. So kind of exactly like we just broke down there. But then just the idea of how we plan out trades, right? The idea of planning out your trade and being able to explain how and why and the sort of logic behind your decision is just as important as the actual structure of putting together a trading plan, right? So it doesn't necessarily matter if you're using the Fibonacci technique or if you're buying candle breakouts or if you're buying pullbacks into the entry zone. The valuable thing, right, is the repetition of that technique, doing the same thing consistently and studying those results and seeing what is working, what isn't working, and maybe then studying which one could give you a better or stronger version of basically a P&L statement, right? Which one would help you maximize your P&L if you changed it X, Y, Z. If you do one thing, one trade, one thing, another trade, and one thing, another trade, then ultimately all that's going to happen is you end up getting confused and you never notice which technique ultimately is most profitable for you. So those are the two things, right, that we think if we focus on those variables consistently, you'll do pretty well. You know, if you're trading candle breakouts or if you're trading pullbacks or if you're trading, you know, fib entries, if you're targeting a 3-to-1 risk reward or a 4-to-1 risk reward or a 2-to-1 risk reward, regardless of what technique you choose, you're going to be, you have enough there, right, to be consistently profitable. But the variable, right, that you then need to focus on is the repetition of that technique, because nothing works 100% of the time. So when we're trying to improve our entries or we're trying to focus on those variables, it doesn't, like, we can't hyper obsess over doing the right thing perfectly each time. It's solving for 50%, 60%, 70% satisfaction, and then kind of going from there. So important, guys, right? Pick your variables that you want to obsess over controlling, and then be obsessive over controlling them. Don't change those variables on a day-to-day or trade-to-trade or case-by-case basis, because those feelings are going to consistently manipulate you, right, and trick you into doing something that probably isn't actually consistently profitable. So if you repeat your technique, you'll speed up your learning curve. You'll notice the patterns that cost you money, and hopefully, right, you'll find yourself in a lot more winning trades with conviction, because you know why you're doing something and the stats behind that decision. So don't obsess over changing it day to day. Don't obsess over, oh, is this a fib entry? Is this a pullback entry? Is this a breakout entry? Be consistent. Pick one that you like. Pick a technique that you like, and understand that regardless of what you choose, there are going to be pros and cons, right, regardless of your style. Does that make sense, guys? I'm just mapping this out. I'm not interested in this. Does that make sense, though, team? Do you mean these, like this type of arrow, Abraham? Oh, if you go into your settings here and you go into your trading, you can then type in or show positions and do that kind of stuff. So it'll be under your chart settings and trading, and it'll show up there. Oh, you mean the risk management tool? You mean like this thing? So you want to know how much you're going to lose here? Is that what you mean? I honestly don't know what you're. I don't know what you're looking for, dude. I honestly don't know. We're still. Oh, fuck, this is gross. We're still consolidating here, pretty much, right? I still know what you're asking, Abraham. So, yeah, I don't really know how to help. Like, yeah. I don't ever visualize my positions on the screen like that. I just use the order window, right? So if I were to bring this in, so you could see I would have it just up here like this, right? My orders and stuff like that. So I just manage my position that way. That's how I look at it. So Microsoft pushing back up towards 410. Still don't see a very strong indication of trending PA here yet. Yeah, it's not enthusiastic enough here. Telling us that inside week story, right? Unfortunately. What are you on about here, Rusty? Oh yeah, dude, it's crazy. This is okay. Oh, bien de piesek. Bien de piesek. Give me some P&L separation. So here, Michelle, right? On the 10-min, the range is 17 3/4 points. I would think that's probably pretty far for me to get you know, 50 points of follow through here, if not more, if I'm going long. So I would be probably targeting like a 17-point move, right? Whatever, I would just go 1R, tick the blue line in that context. Oh, that's pretty sick, Rusty. Dude, it's honestly, it's the stuff that drives me freaking insane too. Because there's nothing more frustrating when tech doesn't work the way you want. Ugh. Drives me freaking mental. Microsoft almost back to 410. Do we have any 10 a.m. data, guys? Anything we need to be aware of? 100% Abraham, yeah. I mean, leverage goes both ways, right? Most people think that leverage is only going to help them out in the upside, but they never really think about how quickly they can sort of degrade their P&L potential. Now, that's to a certain extent mitigated by prop firms, right? Because you're capped over how much you paid for your evaluation, right? It's basically your max downside risk. So you have the risk of, you know, 3 or 4 contracts essentially total. But once you start having 20, 30, 40 accounts, well, 40 is too many. But once you start having 20 accounts, right, then that reset dollar figure starts to become pretty punchy too, and that can become quite the trap, right? So big believer in create that proof of concept always in whatever you're trying to create, and then scale up your aggression. Well, I don't really want to limit my drawdown number, Kulu, right? It doesn't really make, like, I don't want to cut my margin for error. Truth be told, like, I'm not really trying to take any payouts in the first 3 months. Like, the amount that I would take would basically be to break even on my challenges. So I'd be like, okay, my activation fee was, I don't know, $300 maybe. So like $500 per account. So I would just take out 500 once I'm above that trailing drawdown and basically pocket that. Look, what's I think challenging to wrap your head around sometimes with trading, but you make big money by getting a ton of leverage and then being super conservative with that leverage, right? That's how you end up making pretty disproportionate gains. And that's like the opposite, essentially, of how all these prop firms are set up, right? All of them are set up to encourage you or to make you think like you need to trade a ton to be successful. But they know that with heavy leverage comes heavy emotional toil, and most people aren't used to that. And then they spiral out of control and overtrade their edge and do XYZ, right? So we're trying to avoid that as much as humanly possible. And we do that, right, by being incredibly conservative with our decisions and basically avoiding 99% of trades. It sucks. It's really freaking boring. But it is a lot more profitable than trying to catch every single move. And yeah, there's going to be a lot of days, right, where the market moves without me. Yeah. 8K a day, Abraham, like, no offense, man, if you're making that, right, like, you're living in an island somewhere absolutely laughing, right? Even making $2,000 a day is incredible. But it doesn't need to be instant, right? The longer we can delay gratification, the bigger the payoff. $100%, yeah. Well, I don't debate that. Making $400 a day with a 250K account or with a 100K account, easy money, right? Like, you can do that easily. But it feels like it should be more in the moment, and it should be whatever. Yeah, 100% Kulu, yeah. It's way more than most jobs pay. All right, once you're doing... Yeah, it's just take the minimum you can every period you can, essentially. What do you mean distracting? No, it's no trades right now. So what distraction? I got no risk on. I got nothing to do. It's a good time to answer questions. Yeah, I think mint cash is, oh, look, it's going to depend on everyone's priorities, right? And what everyone's objections are, what your goal is with these accounts, you know, how much P&L pressure you have on yourself, right? Talked about this yesterday. I'm making decisions over what I think is best for me, not over for you guys, right? Yeah, and you'd be able to average that, no problem. There's that 10 a.m. data. Yeah, I hear that, Greg. I hear that. For me, like, trading felt realistic when I had my first 6K month. Like, it felt like, okay, this can replace my day-to-day expenses. Now I can make this work full time. I can figure this out. So 4 contracts, Kulu. You need 4 contracts to make you 2 points. My math right? Yeah, 4 contracts to make you 2 points to make 400 bucks. So it's a pretty small number, right? All things considered. But people don't behave that way in reality. If you're up, you know, 400 bucks, you probably aren't going to take it, right? Because if you're trading your P&L, it never feels big enough, right? Trading your number never feels big enough. And then that day where you're looking for 400 bucks and you don't get it is the day you end up blowing up, right? Because you break down. Well, I'm not saying that stop loss would be 4 points. If you're risking or you're trying to make 2 points, right? You probably wouldn't want a stop loss that's twice as big as your profit target. That's not good math. Right? That would mean you need like a 75% win rate to be profitable. Guys, I'm not a believer in daily P&L goals. I don't think daily P&L goals are sustainable because of exactly what I just said there, right? The second you have a losing day, if your goal is to make 400 bucks and you're now down 300 bucks, you're going to keep trading until you're up 400 bucks. And then what happens, right? You blow your account, you lose your money, and you went from losing 300 bucks to losing 6 grand. And now you're in really bad shape. Right? Judge your P&L on the weekends. Judge your process Monday to Friday. You can 100% average that number, but don't make that your daily goal. And then to a certain extent, right? 400 bucks becomes a limiting belief too, right? Where, okay, my goal is to make $400, that becomes what you're going for, and you're sort of capping your perspective or capping your actual P&L potential pretty significantly. So yeah, I generally don't think, my trading tends to not go well when I'm thinking too much in numbers. It just removes a lot of pressure, Chama, right? Like, the less pressure we can put on ourselves and the less we have to be perfect and all those sort of things, the easier it is for us to be profitable. Fundamentally. Not sure if I see too much going on here, team, to be honest with you. So I'm going to be pretty patient here. So I think all things considered, it's probably going to end up being a pretty quiet week here, right? Only 2 trades, no real massive wins, no real massive losses. So, okay, fine from that perspective. It would have been nice to see a little bit more consistent price action, but we had pretty big follow through there last week and pretty aggressive PA. And it kind of makes sense to get a catch your breath day from the markets. That would be reasonable, right? I think so. Yeah, it's about following your plan, right? So if the market doesn't give you exactly what you're looking for, it's not worth the risk to then try to trade or force that setup. I think that's where things get really dangerous. It's like, okay, I've been watching the market all week. I've been watching the market all day. I'm now owed a trade, or I need to justify the time I spent watching. So I got to put some risk on to feel like I'm doing whatever. That tends to be a pretty dangerous decision. Any questions here, guys? Any questions? $29 USD. Let's go, Oz. Life changing. Can finally afford that ramen you've always dreamed of. Questions here, team? Any questions? Again, no confirmations here of setups. So I'm on hands, right? Not getting the look I needed or wanted. So Mike G, what's the standard we need to see volume-wise to get confirmation? So we could say that this is a setup candle, right? Then weak pullback, breakout. This would be your confirmation. That happens on volume, but then no realistic pullback towards your entry zone. Look, Malik, I would zoom out, right? And look at the price action that we've seen here so far this week, right? So don't hold it against yourself. You've seen price action that has still been completely confined within last week's price action. So it's been consolidation. It has been choppy. Don't trick yourself into thinking that this has been a mega trend week. SSB, I'm sure there's already a lot of funds and stuff like that that use like machine learning and various concepts like that, right, inside their algos. As for AI taking over trading, I don't know. I'd be surprised if that happens. But you'll probably see a lot more stuff being automated by algorithms, right? So it'll be like market makers would probably get replaced. I mean, this one here, I guess, but your setup to the downside is not particularly bearish, right? We had a 3 for 3 here to the upside, and then that opening volume standard is significantly lower than that previous open there yesterday. So no real strong indication that bears had actually reclaimed control, right? If we're going 3 for 3 here to the upside, and then we're looking to say a bearish scenario, well, you need to either overwhelm yesterday's volume standard or yesterday's price action. Neither of those scenarios happened, so not a valid setup trigger. Okay, so that thing, Greg, is not an algo, right? The thing that you purchased is not an algorithm. That is a bullshit marketing exercise that people sell you to blow your account. So, yeah, one of my big pet peeves is people calling a trading view indicator an algorithm. Dumb shit like that. It's not, it's insulting to what it actually is. So, Craig, it is not surprising to see higher highs or lower lows on increasing volume. Like, if we're going to judge the standard of this entire uptrend, right, from sort of December till the end, you're pretty consistently seeing decreasing volume, right, as prices climbing higher. So, yeah, I think you probably should have known that. Price can grind up, right? Price can grind down. It can climb higher with weak volume. It can move lower on weak volume. But what we care about is does it give us an A plus version, right? A plus price action is never on decreasing volume. And so it's not strange. It's not weird. It's not whatever. It's just not following our rules. So, the only setup trigger that we got was on this 3-min time frame, right? But then you never got a volume confirmation. So, okay, breakout here, 3-min, no increasing volume confirmation candle prior to a pullback into our zone. Same thing on the 5, right? Volume breakout, but not on increasing volume. Weak pullback, but then no increasing volume bar to suggest. So all the setups we had gave us compromised versions of what we defined to be our A plus look. Honestly, Greg, I don't think you could have tweaked those settings for them to have ever been consistently profitable. Yeah. And on the candles that we did get volume confirmation, we never got the pullback into our entry zones. So it ended up being 1, 2, 3, 4 candle setup, right? Instead of a 1 or 2 candle setup. So we just got the pullback in the wrong order here pretty much today. Yeah, it just becomes unlikely that you're going to get that pullback at that point, right? Look, Greg, if they had an algo that actually worked, they would sell it to a hedge fund and deploy billions of dollars worth of capital to it instead of selling it for 99 bucks, right? Or however much it was to people through Facebook ads, right? You'd make so much more. Right? If it's actually as passive as they say it is and it works as successfully as they say it does, then it would be It's like, it's really suspicious to say, oh, we're saving this from the market so we can help retail. Fuck off. That's such bullshit. Yeah, fair. The expense is people who lose their money. There's a certain demographic, and I'm not saying this is you, Greg, not saying that you in this context whatsoever, but there's a certain demographic of people that just want to buy lottery tickets, right, from Facebook ads or from TikTok or from Twitter. And so they want to buy the thing that is the least amount of work with the most amount of upside for the price that's too good to be reasonable. And so there's a lot of, we'll call it $1 million plus businesses that basically rob people, right? That's pretty much what it is. So it's pretty sad. Yeah, 100%, yeah. Oh, you'll steal our algo. No, you'll just blow your account before the free trial's over. Sounds good, Rusty. Enjoy, man. Any other questions here, guys? Any other questions? Anything you guys want to talk about? I don't think I'm going to be placing a trade here. I'll keep my account unscathed. Look, not a huge week, but 2 trades. 1 win, 1 loss. Fine. Can't really complain, though. Life is pretty good. April's been awesome, guys. It's been a really good month. Pretty much doubled my performance on the year. Pretty sick. Yeah, it's the only way to do it properly, Chumma. And for full disclosure, right, if a fund is deploying some algo, right, into the market and they're doing it, what they have is a full-time employee whose job it is to understand how that thing works and, right, to make sure that it's actually working the way it's expected during the trading day. So it's not like these things are ultimately end up being hands-free. It's basically someone there, instead of trading, someone sitting there watching, right, making sure that it's behaving the way they expect. Because if you didn't have any, we'll call it human oversight on it, the potential for it to basically blow up your fund or liquidate all your positions or anything along those lines would be pretty incredible. So for every algo, there's going to be a team of people basically monitoring it and Think of it like a race car pit crew, right? They're basically making sure it's working, functioning, powering through updates, testing versions, doing stuff like that. So, this idea that it's passive trading, yeah, okay, it takes passive decisions for you, but you need to understand its ins and outs. Otherwise, yeah, good luck doing your job properly. So I break it down by 5 personally, SSB. So my max drawdown is like 6,500 bucks. So my max limit I'm willing to trade is like $1,400, $1,500. Like that's my max loss per number or per trade. The reason I chose that is I never seen in my back test, I didn't seen 5 losing trades in a row. So that was sort of why I chose that. And then once I'm above that trailing drawdown, and I've got a lot of space, then I'll start to go like 1% of my account. But in practice, pretty much every trade right now I'm taking is $1,500 worth of risk. Because I always have my most conservative account is my leader in my copier. And so that's always my account that's either been most recently funded or my evaluation account. And so I'm keeping that risk pretty consistent. Yeah, pretty much, yeah. If you go into the opening range breakout document inside the trading docs, there should be like a little position sizing table or guideline. Yeah, I'm winning on like 65% this year. So it keeps me in play. Basically, look, to a certain extent with these funded accounts, you should be trying to pass or fail in 1 month. And so you want to be sufficiently aggressive without being reckless. And you want to be conservative without being too much of a pussy, pretty much. So Malik, right? Generally, what I would suggest to people is to gamify that process, right? So we talked a little bit about today how daily P&L goals are kind of painful, right? And so it's important that we avoid, judging ourselves too much by that. What I would suggest is then gamifying how you want to approach starting your challenge by picking 5 or 6 things that you want to judge your trading off of. So a good starting point for that criteria would be like, did I follow my trading plan every day this week? Did I risk and set a hard stop loss on all my trades and risk less than my max loss number? Did I scale out as my P&L was increasing? Did I journal and track all my trades? I don't know, did I feel like I had the direction of the market correct. Like whatever, 5 criteria that are more process based than outcome based. And spend a week basically holding yourself accountable to those rules. If at the end of that week you were able to every single day say you did all 5 things properly, then on that Monday, the following Monday, start your evaluation, right? You kind of gamified, proved it to yourself that you're capable of doing it, and then let the numbers kind of take care of themselves and the tradable opportunities kind of take care of themselves. I mean, my win rate in April SSB has been awesome, right? Only 2 losing trades from 8 or 9 opportunities. So yeah, 2 losers from 9, but March was pretty ugly. March, I was like a negative win rate while I was testing things out. So I would say the sample size is probably still too small to suggest it's significantly greater. But the math I basically saw when I did my back test, right, was that it hit 2R about 60% of the time, give or take. So if I could get P&L in or around that range, I'm pretty stoked. That'll be a nice edge. It's just a manual process, right? So once I had this coded up, it's basically, okay, every time I see an arrow underneath, how often does it hit that red line? All right, so last 3 examples, or last 4 examples, it's hit 3 out of 4 times. So literally just go manually day by day. I had a notebook that I use it. But yeah, I like doing it manually because it trains my eye, right? So I like that version of it because I guess in theory you could code it up and try to change it, or try to code it up with Pine Editor and create like a backtest via TradingView. But the execution rules, or where you can enter and exit trades, are really limited. And so it creates quite skewed results. The other criteria you could set is basically how many times is it green within 10 minutes or 15 minutes or some sort of time frame. And then basically going from there. The other alternative, right, if you want to use TradingView for it is, okay, how often is my next candle the same direction as my entry candle? Any questions here, guys? I'm not going to stick around for too much longer, I don't think. I'm going to get going on my Friday here pretty soon. Well, what do you have ticked in your opening range breakout settings, Malik? I would please reference the video inside the Discord. There we go. This opening range breakout strategy video, March 16th. It shows you how I set up my indicator. Yeah, SSB, I found that I have a higher probability of getting the position sizing I want, right, on that. So the problem with the breakout up and over is that every now and then I end up taking a really disproportionate amount of risk, or I just can't get the position sizing I want. So if my stop loss has to be the low of my confirmation candle, right, then I'm risking 8 points, right, or 10 points, or 7 points too often, and that's just too much risk. I don't like having that much. So by getting a deeper pullback, I can justify my risk reward a lot easier, and that makes life more enjoyable, we'll call it. Just allows me to have more margin for error. Have a great weekend, Ruben. We'll see you on Monday, man. All right, guys, final call for questions here. Final call for questions. No, Kulu, I just did it manually, exactly like how I just described. Once the arrow, I see it, then I can see if it pulled back or not. The replay function's not great because it doesn't show you every tick, right? So it goes through like a candle in 5 seconds. So it's not, it doesn't give me any extra information there. Yeah, no worries, man. Have a good weekend. Like, just as a general statement, guys, right? I am pretty lazy and pretty stupid. So I tend to do the thing that is the easiest version, right? So that's essentially the objective, right? It's do the thing that helps me get the data in the easiest way possible, because that's the easiest way for me to repeat it. If it's a super complicated process, I am not really able to execute that consistently, and it tends to be the same with my trading, right? That drawback? Which one? Like the back testing with the replays, Malik, you mean? No skiing today, Kulu. No skiing. I'm going to try to play a round of golf this weekend. Hopefully today, actually. Yeah, it's kind of a pain in the ass, but you don't... The objective, right, guys, we don't need 10,000 days with the backtested data. Find 100 setups. Get the basic idea of what the win rate is for that, and then start to make decisions that justify that win rate, right? So if your win rate on that setup trigger is 60% and you're targeting a 1-to-1 reward, okay, you're probably just going to scratch by. But if you target a 1-to-3, now all of a sudden you have a lot of margin for error. Yeah, we had it on Tuesday. So really the objective is, right, find the facts of your strategy so that you know what kind of filters you need to apply for your execution. And then if you know, right, that your back tested win rate's like 65%, and when you filter out your trades, your now win rate's 55%, well, there's something in your stress test that you need to change to better match your back test. But your back test is only as valuable as your ability to execute it properly, right, when you're actually trading. So it's got to be pretty simple. It can't be too complicated. You can't overthink it too much. And then if we apply filters that improve our perceived win rate, that's expected positive value, right, called stress test. If we make decisions that are decreasing that win rate, then we got to make various changes to that as well. So that you don't create, if you don't have to spend too much time doing it, find 50, 60, 100 trade sample. And then it's the ability to track your trading in your journal and see how close you can replicate that ultimately will give you that confidence. So final call here, team. Final call for questions. My pleasure, Abraham. Hope you had a good week, dude. And yeah, have a really nice weekend. Look, as I probably say this once a week, but look, trading is a lot more glamorous on social media, right? How easy people pretend it is, all this kind of stuff. And I don't think that's the reality. So as ugly as it is sometimes on here, the way I try to behave, I guess my objective is to be very transparent that I struggle, right, with sitting on my hands too. And I struggle with wanting to follow my rules. And I hate doing those things, right? But I hate losing more than I do not trading. And so it's constantly trying to show you guys how to win that fight, right? The more that we can avoid our obvious mistakes, the easier it is for us to make consistent money. So exactly like Michelle is saying, process over P&L. If I try to solve for P&L on an intraday basis, I tend to abandon my process and kind of screw myself over. If my process is good, then over the, call it like grand scheme of things, right, over the sample size, then the money will just kind of take care of itself and I don't gotta force anything. So yeah, it sucks to wait, right? But every trade that we avoided here this week would have been a loser, right? So, you know, it's easy to say that in hindsight and stuff like that, and it doesn't always feel like that in the moment. But if we're gonna make rules, we can't hold it against ourselves that we followed them. And ultimately, if we do that enough, we'll do and make enough money long term. So same deal like always, guys, right? If you have any questions, you know, outside of market hours, feel free to hit me up. I'll do my best to get back to you as soon as I can. But don't worry, guys, right? We're in this as a team here together. We're going to crush it together, and we'll keep doing really well. So have yourselves a great one. Be back at it again here on Monday, and we'll talk to you then. Peace.